Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. Now, my apologies for some of the labels appearing in light green on my daily chart. My charting system occasionally decides to throw a tantrum, and this is one of those occasions. Late last year, a few bullish patterns started to emerge that eventually led to a move up towards a combined resistance in mid-December last year, made up from the November 2014 high at 201.35 and the 50% Fibonacci line of the February 2022 to January 2023 move at 201.70. Plus, I suppose you could also throw in the declining neckline, currently 199.25, of the April to May 2022 reverse head and shoulders pattern. Now, between them all, the market's rise was halted and turned back down through the imperfect and now broken bull channel, with the market eventually stopping down at the combination of the congestion around the 50% Fibonacci line of the May 2019 to February 2022 move at 174 even, and the August 2021 low at 174.5, all done by the middle of January. Since then, prices started moving sideways within a wide 177 even to 195 even area range until the start of April. Now, during that time, the market had been fed ammunition from the important 50% Fibonacci line of the June 2020 to February 2022 move at 177.45, and the nearby rising medium moving average currently at 190.30. This moving average tempered the bearishness and then supported the move up to break higher through the neckline, through the 50% Fibonacci line at 201.70 and the April 2023 high at 204.90, up through the October 2022 high at 216.25 until last week prices peaked up just over the November 2011 high at 243.40. This move up happened so quickly I could not set out targets for the action between October 2023 to date being a bullish halfway hesitation, which is what it turned out to be. So what now? Well, last week I took a look at the longer term charts, and this is what I saw, and I quote, "The key move here was over the 50% Fibonacci line of the 2011 to 2019 move at 198.30. This has seemingly validated the action since September 2022 today as a possible double bottom Adam and Eve type. Thus, potential targets for such a pattern topside will be a primary target X in the 235 area, X1 in the 235 area, with a secondary harder to reach target X2 up in the 251.60 area. These are early days, but that is what it's looking like right now." End of quote. Well, prices reached the primary target X1 in the 235 area and late last week exceeded them even. However, target X2 up at the 251.60 area is still live and also still above the market. This brings me to the pattern made on Thursday and Friday last week when they were at the top of the recent market. Between them, they made a 2-day homing pigeon pattern type. Now, it's not a clear homing pigeon pattern, as it should actually be in a downtrend rather than at a top. Hence the use of the word type with the pattern name. Now, traditionally, such patterns are seen as a bullish reversal. However, in reality, close to 6 out of 10 times, such patterns act as a bearish continuation pattern. Thus, it'll be interesting to see whether the market will follow tradition or the data. Now, so far this week, it's favoring the data. London coffee. During the process of the market breaking higher from back in December last year, prices started to stabilise for a while, right on the 50% projected Fibonacci line at 30.84. However, though this 50% projected Fibonacci support did not last, it did start a process of stabilisation that ended up with a late January 2023 to early March 2024 bullish halfway hesitation pattern. Between roughly the lesser Fibonacci congestions at 30.16 to 30.18 up to the January 2024 high at 32.61. As all this was happening 8 weeks ago, we had the short medium moving average, currently at 33.92, enter the frame from below and turn prices higher still. In the process of making this halfway hesitation, the late January, early March action also became a small bear channel come descending, expanding wedge pattern. Now, I personally favoured it as a wide bear channel. 7 weeks ago, in the middle of the week, prices shot up through the upper bear channel line, stabilising over it, and then the market took its time starting to exploit the upside. As I said 4 weeks ago, and I quote, it nevertheless still lays out all sorts of possibilities topside. Thus, if we look at the bear channel as a bullish start, bullish halfway hesitation, then we need to look at 2 points from where to start measuring from. The first is the January low at 27.44, and the second is from the mid-December 2023 start of rally in the 25.20 area. Thus, for the first pattern, we would have a potential target X in the 34.80 area, whilst from the second origin, you could see us up as far as the potential target X1 in the 3700 area. Well up and off my daily chart. End of quote. Now, a few days later, after my commentary, target X at 34.80 was reached. And 3 weeks ago, the harder to reach target X1 not only appeared on my daily chart, but was also achieved. All this action allowed me to draw a new pattern, the bright red November 2023 to late February 2024 bullish Andrews pitchfork. The market seemed to fit well within this pitchfork, but last week prices shot up, out and away from the upper time, currently at 40.86, though only as far as the 100% projected Fibonacci line at 43.09, before pulling back onto the upper time. The market doesn't seem satisfied as yet with going down under the bright red upper time this time and back into the bullish Andrews pitchfork. It's not satisfied with that yet. However, I will pay close attention to it. In essence, it is not a question as to whether this market is bullish or bearish, but instead it's a question on just how bullish this market is willing to be right now.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.